All right, so I know a lot of people got chopped up on Friday. We'll look here at the 1 minute chart. This was just messy price action all morning long. I know a lot of people were saying they were down. Some people blew their funded accounts. Just a bad morning for most people. So I want to explain a little bit on how I traded this. Is whenever you see just this sloppy, nasty price action, we're not really expecting it to make any major moves, not early on. And so, if we're trying to actually trade this, we have to look for models inside of models, right? You're not going to find a solid model within this that really presents clean opportunity unless you have very wide stops. So, what we like to do in these situations, drop down to the 15-second time frame here. We'll have to zoom or scroll back here. So whenever we're in the 15-second time frame, this presents us more candles, more opportunity to trade. So I took one trade. I'll explain my trade real quick and my thinking here. So when we opened at 9:30, we sold off by like 9:35, 9:40. I started to get that feeling of it's going to be a choppy day. So I just seen this. We weren't really reaching for what seemed to be anything. Uh, and the first 15 minutes is always, for me anyway, typically untradeable. I like to just see how the market moves, what it's going to do. So what I did right from the jump was this 9:30 open to me becomes buy side liquidity. We have this resting here. We've stayed below it the first 15 minutes of the market open. So we have this resting buy side liquidity, and I sat here and waited and waited and waited until about 9:50. I seen that we made this low here, and the time is important because at 9:50 you enter that 9:50 to 10:10 macro, and so I seen we created that low right at 9:50, and that was telling me, okay, we might present a model within a model here. So we know we have resting buy side liquidity all the way up here. We also have all of this buy side liquidity if you want to keep this in mind as well. But my target, I didn't trim my position or anything. My target was all the way up there at that 9:30 high. So basically what I was looking for is I seen that we took this low right here, and whenever the market came down, it came down, made this low. We came up, we took this internal high right here, right? We also took this internal high. We came back down and took this low. So I'm sitting here thinking, okay, so we're just going to go from low to high to low, back to high. And as soon as this started to pump up and then sell back off, I said, perfect. I know exactly what it's going to do because we have London low resting right down here. Let me turn this on real quick. You can see this uh, red line here. This red line is London low. So whenever I have two liquidity levels resting right by each other, I'm expecting the lowest one to be taken out whenever they're close to each other, right? This is Asia low all the way down here. Now that's nearly a 50-point move, like a 45. Yeah, like a 45-point move. So I'm not expecting it to move all the way down here, just because we have that consolidation phase happening, right? We're sitting here accumulating. So anyway, I seen that we took this low and then we started to sell off. So my immediate thought was, okay, we're going to take London low. Whenever it takes London low, let's see what happens. What I would like to see is for some slight displacement back from taking the London low back into this range. We took this low previously, right here. We took this low, came back up, manipulated, took London low. Now I would expect us to not come back down to London low. I do not want to see it back down here. Perfect place to put a stop as well. So what I was looking for was when we came back up, we took this internal high. A lot of you would consider that a break of structure. It's perfectly fine. What I did was I created a order block level. And I was only going to enter if we tapped into this order block, because there's not a clean fair value gap. Yes, you have this fair value gap. I do not like to trade this fair value gap, and I'll explain why. I like to trade the fair value gap on the candle that that created that breakup structure. This candle did not create that breakup structure, right? So I don't want to trade that imbalance here. But also there's some traders who will trade inversed fair value gap. So you have this fair value gap that was then inversed, creating another fair value gap. And so they would have actually taken this short. Now, if you were one of those traders, you would have got eaten alive because it immediately pumped right back up. Anyway, I was waiting for this touchdown into this order block. And honestly, it was a fairly lucky entry because we wicked down here numerous times and my stop was right here. So it's a relatively tight stop in comparison to if I would have entered somewhere higher waiting for, an additional displacement going forward. So I put my entry right on this order block. I was targeting 930 high. So if you remember, this is the buy side liquidity that we are expecting. If this is accumulating and we're going to end up taking liquidity out, likely in both directions. We're going to accumulate, we're going to take out liquidity, right? This is accumulation. This is all accumulation, right? This is where we manipulated. We came down here and we manipulated, right? We pumped back into the zone, manipulated slightly lower down to this order block. This is your displacement. This is what we want to trade. We don't want to trade the accumulation. We don't want to trade the manipulation. We just want to spot it. We notice it, accumulation, wait for manipulation, notice it, wait for an entry model, trade with the displacement. So, go ahead and move that back here. I'll go ahead and turn this off, clean the chart up a little bit. So, we've seen that we tapped back down into that order block, and all I was doing was I was waiting for my stop to be ran down here after taking London low, or this to displace up to the 930 high. I did not trim at this high. You could have. I did not trim at this high. You also could have. You also could have targeted this high. This could have been where you targeted and you just traded it just like this. It's perfectly fine. I was expecting 930 high to be taken because if you zoom out, this is a model that is not widely talked about, but if you look at charts all day, you'll probably on the 5-minute here, you'll see it. If you look at charts all day long, you will see this day in and day out. I'm going to go ahead and delete this. What you will see, the market, and it's believe me, it is messy. It was a sloppy day. The market will push to a level. So in this instance, it came down. It will come up and create this internal high. It will push lower than this previous level that it created. Then it will push higher than that internal high that it created. Then it will push lower than, once again, this low that it created. So we'll backtrack this a little bit. In this example, it came down, created a lower low, a lower high, a lower low, a higher high, a lower low, and then guess what? Another higher high, and then a lower low, right? So what we're looking for is this level here starts off our pattern, and you don't really notice that this pattern is creating itself until you've created like two of these lower lows and higher highs. It's almost like every move that it is making it's taking out buy side and sell side over and over. You don't notice it until you see, like, you're not going to notice it right here. You're going to wait until it took out that buy side and then took out this sell side, and then it starts to move back up. You're like, okay, starting to make sense. It's probably going to take out buy side once again, and then it came back down, took out sell side. Now you see it, and you see 1, 2, 3 taps, right? This is not a tap. This is what started it, right? So we don't count this. This is 1. This is the first move that took out that liquidity. 1, 2, 3 taps. Now we're expecting displacement, right? This is, you will notice it. You can back test this historically. You will see it numerous times on the chart on multiple different time frames. We will create these liquidity levels and sweep them time and time again, typically 3 times on both sides, and then that's whenever we start to displace. Even the displacement was fairly choppy. It wasn't overly aggressive, but it did end up working out. Okay. So I seen that on the 5-minute, and then on the 15 seconds, I seen our model targeting the 930 open high, and that was essentially all that I traded. I took that one trade. Just honestly, it took a lot of patience, because whenever we took the London low here, I was thinking about entering if we broke back above this low. And then I was thinking, well, since we have had all of this accumulation and we've been very manipulative, let me wait. Let me see if we can hold this level, and then I'll go ahead and go long. And so that's why I was like, well, if we break this order block, I'm not interested in it whatsoever. Because if we break this order block, our next level right here, this previous low, why would I take it long if we're going to end up targeting this low anyway? And so we just kept wicking into this order block, and it essentially just worked out beautifully. And I targeted all the way up to 930 high, which was 166. And if you look here, we quite literally just wicked through it and then sold back off all the way back down here and took out this London low. So whenever you see the accumulation, the models are still there. You just have to zoom in. And in, like, me utilizing the 15-second and the 5-minute, I was able to see a few different models, one of my own, that were just playing out. And so it created that opportunity to long this particular market.